Welcome to the high-stakes world of independent restaurant ownership in 2026. Picture this. Customers are back, but costs are relentless. You've got rising food costs that won't quit, labor shortages keeping you up at night, and margins so thin you can see right through them. The margin for error has basically vanished. But here's what most owners don't know. Buried deep within the complex tax code is a hidden profit tool called the FICA tip credit under IRC Section 45B. This isn't just another deduction that shrinks taxable income. It's a real dollar-for-dollar credit, a direct reimbursement for the Social Security and Medicare taxes you pay on employee tips. It's your money, but it's vanishing into the federal system because of lack of awareness or poor accounting. Today, we're going to show you how to turn this compliance burden into actual profit and reclaim what's yours. In July 2025, Congress passed the One Big Beautiful Bill Act, delivering on the promise of no tax on tips for service workers. By 2026, everyone's talking about one headline. Servers get this brand new W-2 code TP, and their tip income becomes federally tax-free. Great news for employees, right? Your staff sees instant relief on their paychecks. But here's the twist that changes everything, and why this matters more than ever for you, the restaurant owner. If servers aren't paying federal income tax on tips, does that mean the restaurant gets a break too? The answer is no. Your obligation to pay FICA taxes on tips, that 7.65% for Social Security and Medicare, remains completely unchanged. You're still legally mandated to pay on money you never kept. This split in the industry has created a survival question. With your cash draining away while employees celebrate tax relief, how do you compete? The answer lies in making the Section 45B credit more essential than ever. Most restaurant owners don't lose the FICA tip credit because they're trying to be aggressive. They lose it because the system around tips is messy, and they're sitting on a gold mine they can't even see. The gap between what you could be claiming and what you're actually claiming is massive, and it exists for three critical reasons. First, generalist accountants who don't specialize in hospitality simply don't know Section 45B exists, or they think it's a deduction instead of a dollar-for-dollar credit, so it never gets prioritized. Second, even when they do claim it, using annual estimates is like trying to hit a bullseye wearing a blindfold. You're guessing at numbers that fluctuate every single pay period, which almost guarantees underclaiming and weak documentation. And third, poor accounting systems mean tip data gets lost, miscategorized, or simply ignored. POS systems that mix tips with service charges create chaos. The result? Money that belongs to your business, sometimes tens of thousands of dollars, just disappears into the federal system. And here's the kicker. With only a 3-year window to claim retroactive refunds, every day you wait is money you'll never get back. The breakthrough came when we stopped thinking about this credit as an annual afterthought and started treating it like a precision instrument. The solution is a 3-part playbook. Do the math the way the law actually intends, structure your gratuity workflow so payments qualify as tips, and capture the data with payroll-level precision. The foundation is something called the frozen wage baseline, a gift from the 2007 tax code that most owners don't realize keeps giving. Here's how it works. The law permanently froze the minimum wage calculation at $5.15 per hour for Section 45B purposes. According to federal law, your credit applies to tips that exceed this old minimum wage, a number frozen since January 1st, 2007. While state minimum wages have soared to $12, $15, even $20 an hour, this calculation stubbornly and advantageously stays stuck at $5.15. This freeze means more of your employees' tips qualify for the credit today than ever before. Next, we protect the voluntary nature of payments. Revenue Ruling 2012-18 draws a bright line between voluntary tips and mandatory service charges. Replace automatic gratuity with suggested gratuity and give customers options. Finally, our methodology integrates this frozen baseline directly into your payroll system through POS configuration, tracking hours, wages, and tips every single pay period. Instead of blurry annual estimates, you get laser-focused, auditable data that automatically calculates your credit in real time. Let me show you exactly how powerful this is with real numbers. Meet Maria, your server who worked 100 hours this pay period and reported $2,500 in tips. With our payroll integrated approach, here's what happens step by step. Step 1. We establish her frozen baseline at 5 and 15 cents per hour, which comes to 515. That number is locked in ice from 2007. Step 2. You paid her a cash wage of $7 per hour, totaling $700. Now here's the key finding. Step 3. Because her cash wage of $700 already exceeds the frozen $515 baseline, the restaurant doesn't need any of the tips to get up to that threshold, so the non-creditable tip amount is 0. Step 4. That means all $2,500 of her reported tips become creditable for the Section 45B calculation. Every single dollar qualifies. Step 5. Multiply $2,500 by 7.65 cents, the employer FICA rate, and you get $191.25 in FICA tip credit. That's not a deduction. That's $191.25 less in taxes you owe, dollar for dollar, flowing directly back into your pocket. That's a real tax credit. Now multiply Maria by your entire staff by 26 pay periods a year. That $191 lesson just became a 5-figure annual windfall. And that's just one employee, one pay period. Once you see the frozen baseline at work, you realize why precise payroll by payroll tracking can turn the credit into a predictable reimbursement stream. And here's where most restaurants accidentally sabotage themselves, and where smart owners multiply their returns. The IRS sees a massive difference between voluntary tips and mandatory service charges, and they clarified it in Revenue Ruling 2012-18. If you have an 18% automatic gratuity for parties of 6 or more, that's not a tip. It's a service charge, basically regular wages. The IRS applies a 4-factor test. It must be free from compulsion, the customer must control the amount, there can be no negotiation, and the customer must choose who receives it. Miss any one factor, and you've fallen into the service charge trap. That simple misclassification instantly wipes out your entire Section 45B credit eligibility on those amounts, triggers back taxes, penalties, and turns your 18% policy into a financial disaster. The fix? Small wording changes protect big dollars. Instead of automatic gratuity, print suggested gratuity with example amounts, 15%, 18%, 20%, so the customer keeps the freedom of choice that the IRS tip definition requires. Preserve the customer's freedom, preserve your credit, and configure your POS to cleanly separate voluntary tips from mandatory service charges. Now here's the beautiful part. Once the fundamentals are tight, you can stack this credit with other incentives for exponential returns. The Work Opportunity Tax Credit, WOTC, rewards you $1,200 to $9,600 per hire when you employ veterans, ex-felons, or long-term unemployed individuals. Here's what matters. Both Section 45B and WOTC are general business credits, and they don't cancel each other out. You can claim both on the same employee. Yes, each credit requires you to reduce your wage deduction by its respective amount, but they operate on separate tracks. You effectively double down on your federal tax relief. So the implication is bigger than taxes. The restaurant starts funding retention, training, facility upgrades, and expansion with money it used to leave on the table. Ultimately, we're looking at a complete paradigm shift for the hospitality sector. The resolution is a mindset change. Stop treating the FICA tip credit as an afterthought buried in your accountant's annual report, and start capturing it continuously as a core component of your profit strategy. In the old workflow, you handed a pile of reports to someone in March, got an estimate in April, and hoped the numbers made sense. That approach tends to underclaim the credit and creates weak documentation, especially now that W-2 Code TP signals a higher level of IRS attention on tip reporting. In the new workflow, every payroll cycle becomes a clean, repeatable process. Configure your POS to segregate tips from service charges, capture hours, cash wages, reported tips separately, push that into payroll, store the calculation inputs, and reconcile totals so Form 80227 and the figures used for Form 8846 don't drift apart. You get laser-focused, auditable data in real time. And here's the overlooked win most owners miss: looking backward. If you've been in business for years and never claimed this properly, you can go back 3 years, file amended returns using Form 941X, and recover tens of thousands in unclaimed credits. That's immediate cash recovery for business activity you've already done. It's like finding money in pockets of pants you forgot you owned. The Section 45B credit isn't just future profit protection. It can become immediate cash to fuel substantial facility upgrades, staff retention programs, and expansion runway. The difference between surviving and thriving isn't just about great food and service. It's about turning compliance into your competitive advantage. So here's your call to action for 2026. Here's the simple takeaway for an independent restaurant owner. No tax on tips helps employees with income tax, but it does not erase the employer's FICA obligation. Stop treating the FICA tip credit as something you discover at year-end. Start viewing it as a core profit strategy, the primary mechanism to neutralize your persistent FICA obligations in the era of no tax on tips. If you're paying that 7.65% on reported tips, Section 45B is how you reclaim a meaningful chunk of it. Your action checklist is straightforward. First, capitalize on the frozen $5.05 baseline. Calculate it right. Second, keep tips and service charges separate in your POS, especially if you use large party policies. Third, absolutely avoid the service charge trap by ensuring gratuities remain voluntary with suggested gratuity. Receipt language aligned with Revenue Ruling 2012-18. Fourth, track everything payroll by payroll with granular precision, not with annual guesses. Fifth, make sure Form 827 totals reconcile with the data behind Form 8846. Sixth, stack your 45B credit with WOTC incentives when you hire qualifying individuals. And seventh, audit your prior filings. Review the last 3 years of returns for unclaimed refunds using Form 941X because you may be sitting on immediate cash. This is money you can reinvest in staff retention, facility upgrades, or expansion. The tools are here. The time is now. Reclaim what's yours. Do not let your money disappear into the system. Treat the FICA tip credit like reclaimed capital, not paperwork, because the difference between surviving and thriving in hospitality is turning compliance into your competitive advantage. Like and subscribe for more helpful video like this, and connect with experienced accounting professionals your restaurant needs. Details in description below.